Welcome to Markets Now. I'm Michelle Rourke with Oliver Sloup Blue Line Futures. A down day in the grains on Friday, mixed in cattle higher in the hogs. And Oliver, let's start off talking about the grain trade. Not the best way to finish out the week in the grains and the corn market. Man, we just hit resistance. And so how much of it was profit taking versus maybe even some farmer selling?
I think there was probably a healthy mix of profit taking and farmer selling. Corn has had a nice move higher from those contract lows. We've rallied 10, 11% from those contract lows to the recent highs. We got, the friendly news that the bulls needed to see, but we just couldn't get out above technical resistance. And that was outlined by the October 2nd high, 452 and a quarter. We got within a penny of that following the WASDE report and just ran out of buyers. And the fact that we couldn't extend above that, I think probably just triggered some sell orders. And we retraced in the back half of the week. With that said, I don't know that it's super concerning from a technical standpoint. I think we just retraced the breakdown point from the start of the week. So that's healthy. Looking into the end of the year and beyond, I still think producers are going to want to use these rallies that we get as opportunities to layer in some downside protection, especially when you're looking at measures of volatility. Volatility is at its lowest level since 2019, 2020. So layering in some protection with some put options is probably a good way to go to at least establish a little bit of a floor and potentially keep that upside open in case we do get out above resistance and we do continue to get friendly news that propels this market even higher into the new year.
All right, what would that friendly news be? Does it have to be a problem in South America or demand, or what do you think will be the trigger?
I think demand has been a nice tailwind here as of late. We would like to see that continue. This week's export sales kind of put a damper on that, and potentially that's why we saw some weakness at the end of this week as well. This week's export sales report, 945,000 metric tons. That was down 45% from last week and 32% from the 4-week average. And over the last several months, it seems like Mexico's really been at the top of the list. Well, Colombia was the top of the list this week. So the fact that Mexico maybe backed off a little bit is a caution flag. But if Mexico steps back in and we see other countries step back in as well, potentially that's what gives us a retest of those highs. And then I think if we want to really make a meaningful move out above there, we're probably going to need some hiccups in South America to get us there. There are parts of Argentina that have been dry, and looking at some of the medium-term forecasts 2 to 4 weeks out, potentially that dryness persists, and that's what could potentially get us up there. So right now into the end of the year, a lot of it's kind of hinging on what's going on in South America.
And what about soybeans? Did we see profit taking there on Friday as well? Because we've gotten up into the upper end of our trading range there and can't seem to get through resistance either.
It's wax on, wax off in the soybean market. It's up a dime, down a dime. And when you zoom out over the last, 3-4 weeks, it seems like we really haven't gone anywhere. Call it $9.90 to $10. Just, I think, building up energy and kind of waiting for new news to give us new direction. I kind of think that we could potentially see a breakout to the upside. But again, as mentioned with corn, I think potentially that takes a hiccup in South American weather to do that. But until then, it's just kind of wait and see until we get that new news. One thing I would also note, corn has been outperforming soybeans and wheat here as of late. I've been talking with a lot of traders at the Board of Trade, and over the last several months, there's been a trade on that's been long 2 corn, short 1 bean. That's performed really well, but it's reached a level that's a little bit overextended. So I wouldn't be surprised to see maybe corn settle down in terms of performance, and I think potentially beans and maybe even wheat could play catch up a little bit if they get some friendly tailwinds into the end of the year.
Yeah, I wondered if maybe we got a little bit of corn soybean spread unwinding here. Maybe even yesterday it looked like that might have been the case. But soybeans, we talk about being range bound, but you say you believe that we have this big South American crop and as well the tariff concerns kind of already priced in.
Yeah, it's definitely a contrarian take. We've been talking about tariff talk, big balance sheet, potential bumper crop out of South America. These are not new headlines this week. They weren't new headlines last week. We've been talking about these headlines for several months now. So I think a lot of that is baked into the cake. I think there maybe is still some risk premium baked in there, but I also think there's an underpriced risk that some of those maybe retreat. What if South America gets a hiccup? What if we start to see demand pick up? What if China comes back to the table with the new administration in the U.S. and wants to make a deal. I think those are all things that are a little bit underpriced. And as mentioned with corn, when you're looking at volatility at multi-year lows, I think there's an opportunity to try to capitalize on that if any of those were to come to light.
What about the wheat market? Did it just follow corn and soybeans, or was that technical?
Wheat's been trying its best to carve out an intermediate